Coming up on today's episode.
We sort of feel like it's a solution that has less debt, less fees. There are other schemes out there, right? Like, obviously, the government has the Help to Buy scheme, and there are other sort of schemes where you have a third party or an investor buying alongside you, but you're on title. Sure, that can work too if you really want to buy it yourself. But what you're doing then is you're actually sharing gains with the government or with that scheme or funder. And we're about helping more people sort of, share amongst themselves rather than an unknown third party. And there's a supply problem out there too. It's going to take forever for the government to go and build more houses. We believe, co-buying, you're actually promoting more home ownership for more people from existing supply as well.
Dodgy advice and bad decisions can cost you big in real estate. We're here to make sure that doesn't happen. Welcome to the No BS Real Estate Podcast. I'm your host, Jo Agresta, and it's time to take control of your property journey together. Welcome back, everyone, to the No BS Real Estate Podcast, your listening how-to guide to the Aussie finance and real estate market. I'm your host, Jo Agresta. Now, today, we're going to flip the script on how most of us think about buying property, because if you've ever sat there doom scrolling on realestate.com, calculator open, wondering how the hell you'll ever afford to get in, you're not alone. And my guest today is Lynda Coker, co-founder of Co-operty, a business that's really taking a different approach to ownership, making it easier and safer for people to buy property together. So today we're going to unpack how it works, the risks, the rewards, and whether co-ownership could be the solution for first-timers and even investors. So Lynda, welcome to the show.
Thank you so much for having me, Jo. It's great to be on the podcast with you and share what we're doing.
I'm so glad you're here, because when we reached out, I'd heard of Co-operty through the grapevine. I'd seen you guys on socials, and I'm like, this is so interesting because, I deal with obviously owner-occupier home buyers who the biggest conversations are always affordability, how to get into the market. And some people just they're not at that point where they can maybe have enough savings or do it alone. And it's so devastating because, you want to be able to help everyone. So when I found Co-operty, I'm like, this is actually a solution that's viable, and I need to talk to Lynda, and she needs to come on our show. So thank you so much for coming.
Thank you.
Of course. I think all good places to start, before we get into the nuts and bolts of how Co-operty works, I like to start with your story, because you've got this really interesting background in finance, startups and innovation. So take us back. What's the journey that's led you to real estate and eventually co-founding Co-operty?
Yeah, no, look, thank you. So my background isn't real estate. So I have largely a finance background. So I spent a long time as a chartered accountant. I worked for EY, but lots of my clients were banks. So I've spent a lot of time in financial services and with home lenders. So, home lending is something I understand a lot about. I've had largely a corporate career, but I guess I started immersing myself in the startup world. Maybe I just really needed to change, and I've done a number of different things. So I have, been involved in setting up an incubator, worked with angel syndicates. I've worked with a number of fintech companies, and that made sense given my financial services background. I guess my last real job was 3 years ago with ANZ and their innovation lab, looking at home ownership propositions, which kind of made me start thinking about, what can we do here? Because there really is such a big housing affordability problem. It was good timing also because my co-founder Liz, and this is part of her story too, we met each other working at Volt Bank, which was a startup bank, which unfortunately failed. So there's a lot of learnings there. But Liz has built home loan products her entire life, and we'll get onto it. But Co-operty is not a home loan but she has, she's a single parent with 2 kids, and she worries about how her kids will afford property. I have family that struggles to afford as well. I spend a lot of my time in the UK, actually, where there is also a housing affordability crisis, but it's not quite to the same extent as here. It's very, very concentrated. Property is the wealth creation vehicle of this country. Do you know what I mean? And prices have just gotten away from everyone. You have the next generation that is priced out. But actually, it's not just young first home buyers. There's a lot of demographics where actually they struggle to afford. And I guess, long story short, how we landed on co-ownership as being a viable solution is that, and people can do it now. It's that it is cheaper. You're sharing mortgage repayments, and it's a natural circumstance of a lot of family and life scenarios. So let's do it better and let's make it easy for people. And I think the key problems that have been experienced in the past with it is that people don't know what's involved, or they get a little scared of it, or they don't put the legals in place to protect themselves, should there be disputes or someone wants out or whatever. So number one, we've made that easy, and we have platformed that. So i.e. co-buying. You just need to find each other and find the property, and we will do everything else. So it's sort of, making that available. But the second big problem is improving access to finance, because the issue is that lenders out there, they struggle to de-risk and innovate. And despite the fact that it is cheaper, you're sharing mortgage repayments, and there is less credit risk for them and arguably a lower risk of default, they haven't changed their mortgage products to suit that. And
true.
So we are working with lenders that are embedding our solution to make it easier and improving that access to finance. So increasing the borrowing power if you're buying together, getting credit assessed as a cohort, So we want to help people get on the property ladder sooner, together, and in a much better, safer way. And I guess one thing I'll just add to that too is that whilst we're targeting first home buyers because they're the most affected in terms of affordability, we're also really working a lot with parents. So there's a lot of parents out there that actually want to help their kids buy. They don't know how to, or maybe they've got multiple children to help.
True.
And what currently happens is they gift the money to the child to help with the deposit. And what we're saying is instead of doing that, you could consider co-buying alongside. So use that money to co-buy. And then what happens is your child borrows the residual. So they're borrowing less. Let's say you're putting up kind of, 10%, 15%, or it could be anything, 5%. Your child's borrowing less. So they come up with a smaller deposit for the lower loan. And parents can be off loan or on loan. But in this circumstance, and I'll use an example of last week, we had parents in Queensland who had 2 children. They're in their late 50s. So, retirement's not too far away. And, they've got a son, Simon, he was sort of mid-20s. He wanted to buy. They've got a daughter that's at university, late teens. And so essentially they co-bought off loan. Simon borrowed kind of the residual, which I think was like closer to 85%. They put up 15%. And which meant he had to have a smaller deposit. And also, in this scenario, you don't need lender's mortgage insurance either. We're working with a non-bank lender. And for the parents, they were spending the money that they would anyway, but they're actually protecting their investment. They're getting a return on their investment to then help the next child or preserving their retirement funds. And even, wealthy parents that can afford to do this, what they're worried about is actually, if we still use Simon as an example, Simon partnering up and that relationship breaking down and there's leakage of the gift. So there's sort of asset protection, there's peace of mind. There's also an independent agreement in place. So there's sharing of costs. So the bank of mum and dad doesn't get rated further. So it's sort of like you're helping your child co-buy and transition into that kind of arrangement, protecting your own investment, therefore being able to help other children as well. And it's not at the expense of your retirement.
Yeah, and makes complete sense. And this is exactly why it's such an important topic, right? Because your background, especially in the finance and banking space, you would see a lot of these toing and throwing different scenarios, different families, different young people trying to break into the market. And I guess if you go back in time, was there a point where there was a light bulb moment or an event that happened that back 8 years ago that you're like, right, I've had enough and I'm doing it?
Definitely. I think life is like that. And I feel like, as I said before, I was really surprised coming back to Australia after spending a long time overseas at the extent of the problem here. And I also hadn't bought property myself here. Do you know what I mean? I bought overseas.
Yeah, wow.
I came back here and I was sort of like, oh my God, maybe prices down at some point. And did they come down? No. So
the UK kind of taught you a lot there as well. Like, obviously that experience would have opened your eyes to our problems. It's like, there's problems there, but then you come back home and you're like, oh God, the problems are everywhere and probably worse.
Yeah. I mean, there's a lot of similarities in terms of market and products, and we have the same legal system. But property as an investment is far more concentrated here. And, it was a light bulb moment with Liz too. I mean, Liz was ready to do this, and I couldn't do it without her. And, as I said before, she personally also worries about her children and how they will buy property. So we really did a lot of customer research. We talked to a lot of people. It is a slightly different market here in terms of the UK, in terms of it's very broker dominated. People get financing through a mortgage broker. So we very much work with mortgage brokers for distribution. Co-ownership isn't for everyone, but we absolutely see that it is a solution that can help many people. And you asked at the very beginning, like, this helps investors too. We're agnostic as to whether you want to co-buy to live in the property or not. If you just want to co-buy for investment and go rent it out or Airbnb it, you can do that. Like, we don't mind. This works in either, scenario. The key difference is you're co-buying on title and you're truly owning it. You have management rights. You can do whatever you like with it. It's not like you're just buying a brick or a notional sort of fraction of a property. You truly own it. And one thing I'd add is that our solution is predicated on tenants in common. And
interesting.
What that means is there's two ways to buy a property if you're buying with more than one person, and you can buy joint tenants, which is what most people do if they're married. They buy jointly and they own the property 50-50. And if you have three of you, and you buy joint tenants, it has to be equal. It's a third, a third, a third. With tenants in common, it can be uneven. It can be uneven to contemplate differing contributions. So it can be 60, 20, 20. It can be whatever you want it to be. And the other key difference is that it's your share to do whatever you want with. With joint tenants, if something unfortunately happened to one of the parties, ownership of that share passes to the other person or other owners. With tenants in common, it does not. For example, you can bequeath it in your will to go to whoever you want it to go to the extent you want to sell it to someone else. You can. Legally, the framework exists to do this. No one's ever really digitized it before, and there's been no funding product to empower it. So that's what we are working, towards. So all of our agreements are based on tenants in common. And, there is some education around that, and we've built some guides around what that means, but we really feel that it offers so much more flexibility in terms of property ownership. Not to mention, as we said before, the real sort of push behind co-ownership is you are sharing costs, you are pooling funds. It is cheaper, and the next generation is very open to sharing. You just look at the way that they share data and other purchases. They're open to sharing. You have people probably there at the moment flatting together, like move from co-renting to co-owning.
I love that because it's such an interesting concept, and I think for a lot of people, especially flatmates, right? Like flatmates or even family siblings. I've known many of my, inner circle that have bought with their siblings. If they haven't had partners, they're like, oh, we'll just buy something together. And sometimes it's been for investment, sometimes it's been for ownership where they live together. And what I find interesting about what you said is the actual financial structure exists. It's like the tenants in common, all these things exist, but like you said, no one's digitized it before. So that's why I love that you've taken something that it's not, it doesn't not exist. It's there, but no one's really given it an experience and a platform to access it. And that's what makes it so complicated when you think about going down this path, because immediately when you think of co-ownership with anyone that's not potentially a spouse sometimes, or a partner, it's, oh, what if it gets messy? What if they find a partner and they want to get out of it? Or what if? And what you've done is kind of given a product that says, well, there's some rules and there's some really common stuff that happens. Life happens. Like there is a reality that someone will get, have a change of circumstance. How does Co-operty kind of manage those things if one party wanted to get out, for example? Like, is there any agreement or terms that locks them in for a certain period?
So essentially, I guess if I take a backward step, and what does Co-operty do first and foremost? So let's just say you found each other and you found the property. You come to us, and we can help you with financing because we work with lenders, but if you've got the financing sorted, no problem. And essentially, as I said, we do everything else. We authenticate you, we authenticate the property, we provide a valuation, we link you to conveyancing, we've integrated a conveyancer, and then we put the legals in place that covers all of this, right? That is part of our platform fee.
It's like all in one.
Exactly. And then that just gets executed at settlement. And the agreement, which is so important to have in place, covers all of those things. So it will contemplate disputes, a process to go through if you have disputes. It will contemplate improvements, how to manage that.
Yeah.
Wants to contribute, who doesn't. Contemplates temporary financial difficulty. So if one party is temporarily in financial distress, you can have remedy loans between the party that doesn't even kind of contemplate the external lender.
Wow.
But if it doesn't get paid back, you get equity diluted depending on what's agreed up front, and also what happens in the process of a default. And lenders love this because actually this lowers the risk of default for them, having something in place that is clear as to what happens. Because ultimately, often what you find is no one wants to have to contemplate a forced sale of the property. And sometimes you'll have co-owners that don't want to sell. So to your question, what happens if someone wants out? Because someone may want out. In our agreement, we have contemplated exit pathways, so that people agree on. Essentially, a logical first step is that your other co-owners have the first right to buy the person out that wants out, at an independent, fair valuation and proportional to their existing ownership. If that's not what's wanted or viable, then you can rejig your holding. You can bring someone else in. Do you know what I mean? Oh, actually, you know what? I currently own 40%, but I want to take it down to 20 and I want to bring my sister in, do you know what I mean? You can do that.
It's like expand it out, so it gives you that flexibility.
Yeah, exactly. And if that's not viable, then you can actually kind of list your share for sale. There's tenant and common exchange as well. But part of our roadmap is we really are working towards partnering and putting in place a property fund that is the buyer of last resort. So, we'll buy at a slight discount because we're providing liquidity, but we will agree to sell in the future when the other co-owners want at premium. So, but ultimately what we're talking about here is I don't see why you can't, in due course in the future, have a fractional on-title market. A house is a real-world asset that actually, like other real-world assets that are being fractionally traded, that should be able to.
It's so interesting that you say that, because I think in the past, like I've seen some other businesses that have tried to go down that path, but they haven't executed it with enough structures. I think that comes down to like some of the experience that, maybe they didn't have at that time. This is like 10 years ago. I think someone did it with buying virtual properties, right? So via the 3D world, they have virtual property, virtual houses, and they're trying to say that Bitcoin is the future for that. So you buy Bitcoin with a property on it. And I'm like, a virtual house that's actually not an asset, but they're trying to push the idea that this is going to be the future. And I'm like, I love AI. As you know, my business is AI. The reason I chose property in my business is I said, no matter how good AI is, you're a human, you're always going to need a roof over your head. It's the most long-term thing that I can see happening to the human race.
Absolutely. Look, it's a real world asset and you can't like cut it into a third or whatever. And we're not even suggesting that. But I feel what's interesting is it's not even just first home buyers. I saw like the news the other day about a co-living arrangement with these retirees. And it's not even just retirees. Co-living is becoming a thing, and developers, and we're working with a national property developer as well at the moment in terms of helping people with search. But you are having developers building or refurbing existing buildings for multi-tenanted occupancy. Do you know? Warriors, like this is a thing, and so co-living is a thing, and I feel like co-buying is a thing and will be a thing alongside that, if that makes sense.
I couldn't agree more. We've had some fantastic previous guests that do co-living, right? HMO Property Group was one. They came on, and Ben and Kyle from, the co-living space and how to buy these, exactly what you just described and exactly how you've said it. Why not being able to own it? Because a lot of these people that are moving into these properties, they're buying at the rent is a bit lowered or they're fully furnished. Like for anyone that's listening who doesn't know what I'm referring to, you can always go back on a previous episode. But co-living is the idea that as an investor, you buy one property, the property has maybe, 4 bedrooms in it or 5 bedrooms, but they're converted into serviced apartments. And then there's common areas for everyone to, have a common kitchen or common backyard, common washing area. And what we're talking about here with Co-operty is, we have co-living where people can rent each one of those rooms individually. Why can't they co-own it individually as well as a group? So it's like they're owning that fraction of that property together. And I feel like that would actually transform a lot of the way we look after homes. So at the moment, with typical tenant and investment or investor arrangements, is there's always that stigma, but tenants can ruin houses. It's like, and then investors don't look after their houses. Same thing. This kind of encourages that collaboration of, you both, that could also be something that you're both accountable to now. It's like, no, if something goes wrong, we've got our shares and our rules and our agreements, and you've made it so clean from the beginning that you're enabling like a very clear-cut set of like terms that everyone agrees to. So it's not this confusing traditional model that we have now where if I wanted to buy a house with my partner, it's not like we've divided how we do things in the house, but I'm not even going to use that as an example. We've got a family holiday house. It's co-owned by 4 people, in our family. There's no rules set out for that. That's just like if something goes wrong, they have to talk about it. If there's a dispute, what happens?
Yeah, exactly. So I guess there's 2 parts to this. So one is legal protection. So that is what we have solved for in the first instance in terms of making people feel comfortable in terms of the arrangement, right? So that actually there are those protections to cover for where things go wrong. People will always have disputes about things. And I think it's probably a key reason people sort of have a hesitation to start with in terms of going into an arrangement like this. We purposely don't matchmake people. We feel people are more likely to co-buy if it's, a family member or someone known to them, particularly if you're going to be living in it. But also, just to be clear, you can co-buy and have someone live in it and someone not live in it, right? That is absolutely
that's true.
Fine. And that's contemplated in the agreement as well. And obviously there are different tax implications, but we're not changing anything. Do you know?
Yeah.
The tax implications are according to your circumstances. So that's one thing. The other thing is the financing, which is why we have to work with lenders around this, because a mortgage hasn't changed in like over a century,
It's so antiquated.
So, and we have a phased roadmap with lenders in terms of working towards a fractional loan. So the parent example I gave you before is sort of a quasi-fractional loan. You have parents off loan and the child borrowing the residual. It's a fractional loan, but the parent is still sort of providing a security guarantee, but it's limited, right? It's limited to the extent it would be otherwise, because if they hadn't co-bought alongside, typically they have to put up their house as security or whatever. Here it is reduced because their fraction that they're owning is considered security, right? That is security.
That's unbelievable. That security piece is so important because I think that's what a lot of, not everyone, but, some people have that concern of I have to go guarantor. And for their kids, of course, like a lot of parents do, but some people probably aren't in the position, they don't have the risk appetite. This is really enabling them to think about that different.
It will also fall away as and when, the child's interest in the property, appreciates. Obviously, the value of the property is going to appreciate as well. So, it's not there forever. And then there are different exit pathways for the parent. Do you know what I mean? So, depending on their circumstances, they may want out in due course. They may want a different arrangement. In every scenario, we recommend people get their own independent financial and legal advice, but we also recommend that, if something happens to the parents, we recommend that typically the children are part of their estate anyway, but, bequeathing their share of the property to their children or children they haven't helped yet, there is no inheritance tax and there is no CGT if you're inheriting the property via death. So, but I will also add too, another option parents do or undertake when they're helping their kids is they lend the money and they draw up a loan agreement. Now, sure, that gives you protection as well, but the banks often see that as a debt of the child, so that impacts their borrowing power. So that's another reason why we feel co-owning is better. Sure, there's CGT applicable.
Of course.
Parents are not living in the property, but if it means you've made something.
Yeah, and it's completely different, right? Like this is the big Australian dream, is to own property, and for the conversation of affordability, like, is a huge thing, not being able to break into markets or parents going guarantor, trying to help their kids. But you said, like, I think what I wanted to ask was, do you see that there's more, like from your user base, is it more investors doing this kind of investing tool, or is it parents, or is it you don't really have a majority, it kind of is, you're getting all these different use cases?
We are very much targeting first home buyers, so buying as a cohort between friends, flatmates, or a other family member, or parents trying to help their children. That's by far being focused, but also, the most traction that we've had. However, having said that, we've had, everyone's situation is different. We've had numerous use cases that are also not first home buyers. So I'd say the next popular one is for investment. So people coming together to co-buy for investment. And, this works. And then I would say, granny flats. Like granny flats are very increasing in popularity because governments have reduced the restrictions around building them, like around building a secondary dwelling, in terms of size, in terms of purpose. It's not just for a granny anymore. You've actually had children living in the granny.
That's true.
So
that's so funny.
Not on separate title. It can be fractionalized. There's ways of working through that. Ceased estates and multiple children inheriting property. And I guess sort of the other end of the spectrum too is, it's not necessarily a affordability concern, but you can have two SMSFs co-buy tenants in common. It requires a unit trust structure, and not all lenders do it, but there are definitely some that do, and we work with a SMSF specialist broker. But our focus is on affordability. But I guess what I'm trying to convey there is that there are numerous kind of scenarios where this works, and different demographics as well.
Of course.
And another reason we started this is at the time of building, YouGov had come out with some research that 47% of Australians across demographics were open to co-buying in terms of more flexibly owning property and being able to better afford. So people want to do it. I mean, it's a significant capital outlay. It's what the whole country obsesses about. So we sat back and thought, well, why is it so hard? And what are the key issues and contentions in doing this? And one, legals. 2, finance. So that's why we're working, we've sort of phased what we're working on and building. But yes, there's a legal framework that's out there. It exists. It means you can actually co-buy in whatever sort of, fractional proportion you want. And also, you can sell it to the extent that you want. But that has to work alongside a financing product, which is what we're working on too, which is what we've already put in place for the scenarios I talked about. So we see this as, co-ownership being a new category, like of mainstream property ownership, and let's make it easy.
I couldn't agree with you more, to be honest, because the way you've described it, it's so nicely put. I love what you're doing, because for anyone buying property, they always look for a one-stop solution where someone can tell them from A to Z what do they need to do. And with Co-operty, you've actually packaged it in such a way that makes it not only accessible to where someone wants to do co-ownership and doesn't know how to explore the option, by themselves today. You've actually given them every single place and area and guidance and steps through Co-operty. So I just think it's amazing what you've done in that way to capture it. And I think this will really spread far and wide as a longer term solution, honestly, because I've met so many couples or so many family members, or even, I've had it with, inheritance, for other family members who have said one sibling doesn't want to own the property, the other one does, and all the complications that come with it. And it's Co-operty just seems like something that not only will change how first home buyers break into the market, and I think that's the hardest part, right? It's your first property is always the hardest one. That approval for you can afford to do this, and the bank says, here's your approval, yes, you can buy it. That's the hardest one to get into, because once you're in the market, then you've got some equity, you've got some play, there's some capital, and there's options, and you can start to feel out your options after maybe 2 years of, okay, there's a bit of equity, what can I do? Whereas with Co-operty, it's the same thing, except here you go, do you want a fraction of it?
And that's what we're about. We want to help people get on the property ladder sooner in a smarter, faster, cheaper way. Yeah. So, and look, you have to, co-ownership's not for everyone, but we really feel, given the research and the kind of traction we've had and discussions we've had, it actually is what people are open to. They want to find out more about it. We've talked about a lot of things here. There's education, there's questions, we welcome them. Everyone's situation is different. But we see it as a really viable way to get on the ladder sooner. Borrow less, buy sooner.
It gives you options. That's what it's going to give you, a pathway forward.
Absolutely. Start investing in your financial future earlier, So, and we've sat back and thought about, what other options do people have out there? So there's actually, you can go and get, if you still want to go it alone, you can go and get a no deposit or low deposit loan. You've still got all the debt yourself. We sort of feel like it's a solution that has less debt, less fees. There are other schemes out there, right? Obviously, the government has the Help to Buy scheme, and there are other sort of schemes where you have a third party or an investor buying alongside you, but you're on title. Sure, that can work too if you really want to buy it yourself. But what you're doing then is you're actually sharing gains with the government or with that scheme or funder. And we're about helping more people sort of, share amongst themselves rather than an unknown third party. And there's a supply problem out there too, right? It's going to take forever for the government to go and build more houses. We believe, co-buying, you're actually promoting more home ownership for more people from existing supply as well. So it's kind of a more sustainable option too, but it does fit any natural circumstances. So
it's like when you don't know what your options are, this is a really kind of a new way of kind of approaching it. It's like you're not you're making it accessible to a point where someone can pick up the phone and go, look, I don't know what my options are. I don't have much of a deposit. It's very minimal, but me and my mate want to try and break in. Ticket between us, we've got a few $100,000 that we could do. And it's like, so you want to do it together.
Increase your borrowing power. You might be able to buy a better property and sooner.
And I think that's part of what I love about what you're talking about. And this is, I always come back to risk, right? Because a lot of the hesitation, and I'll ask you this question too, maybe rather than me sort of going by my experience, but like, are there any common kind of, not objections, but like what people kind of worry about before they do it, like with this type of purchasing situation? Do you get anyone that kind of says like, oh, what if something happens and what if this happens? Or, do you get that a lot? And how do you kind of bring people to like that reassurance of, well, no, the way our process works, you're not falling into the same trap you would as a traditional kind of purchasing route?
Yeah, of course. And I think the 3 key worries that people have when we speak to them is a lot of what we've talked about already. 1, what if there's a disagreement? What if there's a dispute? What if we can't agree? What if, someone gets into financial difficulty? What happens? What if someone wants out? What if someone wants out? What happens? So we've thought about all of that, and we've had a number of law firms look at our legals, to do the thinking. So we've got something very robust and reliable that everyone has to sort of agree and sign up to, and we don't force people. It's a pro forma template for you to use. Should you really have an issue with anything in there, you can change it. Obviously, that's at your cost. But what we've done is actually kind of our platform fee is $15.99. Like, it's not a lot of money for you to go and get a legal agreement like that. Would cost you between $3.5 to $10K to find a lawyer to then put it in place. And we have platformed it, as well as actually platform the transaction. As I said, authenticating you, the property, the valuation, plugged in the conveyancing, putting the legals in place. All of that is part of the $16.99. I actually feel like we could probably charge a lot more, but I was
like, oh no.
Buyers, we want to make it easy. So the first and foremost, we want to make this easy for people. So put the legal protections in place, help them with the transaction. Our next build is actually post-transaction, helping people manage their own arrangement should they wish, So for a subscription fee, let us track shared costs for you. We'll provide you with quarterly valuations, accounting and tax summaries if it's for investment. Do you know what I mean? That's kind of next cap off the rank. But ultimately, we want people to help people buy in the first place.
It's like, let's get you in.
Yeah. And then, as I said before, financing is key, right? Like, none of this makes any difference unless you can actually get the financing to buy in the first place. So that's why we've made a really huge effort to work with lenders, and they're non-bank lenders, so they've been fast to innovate, more flexible with their home loan product, and really improve access to finance. So really enable people to be able to co-buy, get that loan, get on the property ladder. We're working with brokers as well. And one question I have had a lot from people, they're like, non-banks. So does that mean that, my interest rate's going to be more? Well, yes, it is going to be more. But if you're borrowing less and buying sooner, that pays itself off very, very quickly. And they're very competitive rates. This is not a subprime product or anything. You still have to meet. Yeah. You have to meet the criteria. So, so we're here to help people.
I love it. I'm so thankful that you came on to share this today. And I can't let you go without doing our fan favorite segment, which is our Reddit stories. So for our listeners, thank you so much for submitting your questions and directing us to these stories. So we have part of our community is people love to send us their Reddit questions. So every time we're getting ready for an episode, we put a call out to you guys and we say, send us what you've got, any questions you want answered, or direct us to something we should look at online. It's always from Reddit. And this submission today came from Sarah. So Sarah, thank you so much for sending this one in getting ready to meet Lynda. So Lynda, I'll read you a story from the Reddit, and I think I would love you to kind of help us tackle it together and how Co-operty kind of fits this solution or how it would help these guys. So you up to the challenge?
Yeah, of course.
All right, let's do it. So this one here says, this is from the Oz Property chat in Reddit. My partner and I are thinking about buying with another couple to afford a home, but we're terrified about what happens if one of us wants to sell. Is this just asking for a friendship-ending disaster? Okay, I think we've unpacked it, but I would love for you to sort of specifically look at this couple and when you see 4 people going in together.
Yeah, and look, I don't think it's an uncommon scenario, and it's absolutely a key issue that we contemplate. To what I said before, put an agreement in place, and there are pathways for exit. And because this is all predicated on tenants in common, it is your share to sell if you want, right? And there is a robust mechanism and a process to go through should that actually transpire. But we contemplate that, you know, and the beautiful thing about that is you shouldn't be locked into an agreement if it doesn't suit you anymore. There should be mechanisms to kind of navigate to a pathway that suits everyone. So absolutely, that is a key issue we contemplate. And as I said, there are those pathways that we spoke about before.
Spot on. I think these guys, these guys would definitely benefit, I think, from co-operty if she's terrified, like I'm thinking from their perspective, you know, she's terrified of a friendship ending disaster, but it doesn't need to be like that. I think that's
And I think, you know, like we're humans, we do disagree about things all the time. I think having something in place just gives you reassurance and peace of mind, you know, that do you know what I mean? There's a process to agree. Yeah. Things are agreed up front, to be fair. A lot of things are agreed up front. But there's also a process that is there to be followed should there be, you know, a disagreement about something. So it's kind of giving you peace of mind up front that like how this is going to be managed.
And it facilitates it smoother.
It's a legally binding agreement. And, you know, to give people comfort in terms of working with these lenders, you know, we had to go through internal DD, external DD, to their internal lawyers, outside lawyers.
Oh my God.
This is, you know, they feel comfortable to actually align their home loan product with this, and it helps them because as a lender, they're like, okay, so, you know, this agreement is enforceable, so this gives us comfort that actually there's a process in place should something go awry here, right? Because they don't want to force sale either, particularly, you know, depending on what time this disagreement or someone wants out happens. So everything's clear, everything is upfront, everything is agreed to, you know, ahead of actually settling on this property. So, you know, we've tried to contemplate, you know, everything we can think of. Sure, like lots of other things happen, but yeah.
But I think what's important about what I like what Co-operty does is you're laying it out from the beginning. And I think often as humans, in general, people, like we like to know what are the stakes and what are the terms, like when we're up front, right? Which helps us manage like, oh, how risky is this going to be? And what you do is you're facilitating those conversations very early in the piece that typically don't get worked out until later when a disaster happens. It's like, oh no, the pipe burst. Who's paying for it? Is it you? Is it me? Do we have to go 50-50? And you kind of just fumble through it when I've seen co-ownership in the past, right? It's like, I can't afford it this month. Can you cover it? And I'll cover the next problem. And it's all messy and confusing. Whereas what you guys have done is said up front, like I feel like for this couple on Reddit that are contemplating and unsure, Co-operty would be like a no-brainer here because, well, here's how we do it. Here's all the risk laid out. Here's how we can divide who's looking after what. And you can move forward with that reassurance and that comfort of, oh, okay, all right, I know what I'm looking after. I know what they're looking after. That's it.
Yeah, and I don't know the circumstances of this particular query, but it could be that one couple is living in the property and one couple's not. And we also contemplate how that works in terms of the mortgage, etc., you know, because arguably if the couple that's not living there, then notionally they get paid rent for their share, right? So, you know, so we work all of that out. Yeah, we've tried to make it as easy as possible.
I know. I think you've nailed it. And today's episode has painted such a great picture. Like, I'm so excited to share this with everyone. I know that there's a lot of listeners that we have tune in that are always hunting for different vehicles or ways to break into the market, especially our first-time buyers. There's a lot of you guys that tune in. So thank you all for submitting your questions and inquiries. And we will absolutely put, you know, Lynda's details and Co-operty's details for Lynda and Liz in the show notes. And we'll have plenty plenty of ways to connect with Lynda, and the Co-operty team, because we are in full support of you guys.
Thank you. And look, reach out either to me directly, Lynda@co-operty.com, hello@co-operty.com is our general contact email. We've got guides. We've actually got like a 2-minute eligibility quiz too, if you want to just sort of, go through that. And yeah, we're here to help. So please don't feel shy in reaching out. And thank you, Jo, for having me on this morning as well. Like, I really appreciate it. And it's great to talk to you too and learn more about what you're doing, because you're doing exciting things too.
Thank you. I think this is the start of a really good friendship, partnership. I think we've got a lot that we can help each other with in the future, and especially our listeners and the home buyers who are, they need these vehicles. You guys are the ones that make this all possible. And Lynda, I'm so thankful for your time. That eligibility quiz, guys, who are tuning in today, will be in our show notes. We'll put all the relevant links and ways to contact, Lynda and Liz personally, or through Co-operty. But Lynda, thank you so much for all your time. I've loved this episode. I just think it's such a good way forward and a good path into the future for affordability. It tackles a very big problem, and Aussies are asking for it. 47% is a huge percentage, of Australians that want this dream and can't get it. And I love that you're facilitating that, that journey into the market.
That's a wrap for this episode of the No BS Real Estate Podcast, powered by Abodey AI. If you found this conversation helpful, don't forget to subscribe, leave a review, and share this episode with someone who might need it. If you're looking for more guidance on your home buying journey, you can visit www.abodey.com.au for expert advice, property insights, and the tools you need to find the right home with confidence. If you're already on your journey, you can also download our app. Just search Abodey AI on the App Store or Google Play. Have any questions or want to connect, you can follow us on Instagram at abodey.com.au or send us a message. We'd love to hear from you. Thanks for tuning in, and we'll catch you in the next episode.